Hey there, it's Melissa with Atlas CFO. Today we're going to talk about the different types of accounting and why you need more than one accountant. Yes, this is a very exciting topic because what we find is a lot of our good contractor friends think, well, I just need one. And that one accountant is going to do it all. They're going to post the transactions and do all the payroll and reconcile everything and produce financial statements and make financial decisions, do the forecasting, do the projections. And usually we find that those are a bunch of different skill sets and knowledge bases that will probably need to be divided out. In fact, most of the time you need people from each one of these types of job descriptions. Now, it may not be full-time, but you probably need something from each one of these types of employees or relationships. So today we're going to talk about how all of that works together, and we're going to break it down into some really easy to understand methods of how accounting works and how to get the most from your team, whether it's in-house or outsourced, and also help identify what it is that you would need to take your business to the next level. It's taken me a little bit to refine this down because whenever you're an accountant, it just is all called accounting, even to us. It's even all the same to us. But it's actually 4 different types of accounting or 4 stages of accounting. And I'm going to break those down for you today so that you can see where your business is at in these, not only these processes, but also these stages. And that'll help you identify what you are wanting to do with your business to take it to that next financial enlightenment level. Okay, so the 4 types are transactions, reconciliations, financial statements, and then financial planning, projections, really strategic decision making. So each one of those 4 is very important and they build on top of each other. So you really can't do reconciliations unless you have transactions. And that's really not only a progression, it is types and it's also stages of growth. So let's get into it. And I think it'll make a lot of sense whenever you see it. So the first stage, phase, important item in accounting is transactions. Transactions are all of the job costs, the AP, the payroll, the billings, all of the various transactions that are going into your software. So that is how we get the information in. That's how we get it organized. And those transactions and the entry of those transactions is very important. We all start here. Whenever we have a beginning business, one of the first things that everybody does is they start entering transactions. They use that accounting software to make it easier and more understandable and categorized and organized, right? Very important category and really the first step in accounting. The second step is reconciliation. So just a couple examples of what that looks like. It could be the bank rec, and that's usually one of the first reconciliations that we see in companies. They're ready to take that next step, so they start making sure that the bank is reconciled. It's a wonderful first step, but that's not all. There's also job costs to reconcile, balance sheets to reconcile, accounts to reconcile. You basically have to go through and make sure that all the transactions went in the right category. And you would think, well, as long as I entered it right, it should just work out. And it should, but sometimes it doesn't. And sometimes software does crazy things, or sometimes we get fat fingers. So the reconciliation process allows us to go through and make sure that everything is in its right category. This is something that I teach in our all access training, which gives you access to all the training that we've created and anything that we will create. And I spend quite a bit of time talking about how to reconcile different accounts and what it entails and why it's important. The third step is financial statements. So you can see we have transactions and then we reconcile them and then we're ready to do financial statements. We can't do financial statements if we haven't gone through the 2 other steps. If we don't have transactions, we can't reconcile them. And if it's not reconciled, our financial statements won't be correct. Not only are financial statements built on reconciliations, they're also built on basis of accounting. In our wonderful world of construction accounting, it is percent complete accounting. That means that to prepare financial statements, we also have to do all of the additional steps to make sure that they are complete and reliable. Financial statements is a little bit more than just being able to print it out of the software because you have to know whether it's right. The fourth Got to keep up. Yes, the fourth item on the list is the strategy, the business decisions, the what do I do if I want to buy another truck or add another project manager? How does that affect me? That's really the last stage in our 4 stages of accounting, our 4 stages of growth. And that's based on that we have to have transactions in order to have reconciliations, in order to have financial statements, in order to do financial planning and decision making. So each one of those are all very important and they build on each other. And if you have them in order and correct, you can then enjoy the opportunities of planning your next steps. What happens if? And that is where we see just so many of our contractors so excited because they've gone through those first 3 stages. They're producing their financial statements. They've got a method and then they're ready to do the planning. Just really fun. So you can see that not only are these types of accounting, they're also stages of accounting and they're also stages of growth. And I'll explain that just a little bit. Whenever you're starting out as a contractor, you usually focus on transactions, right? You're going to put it in, and then you're going to make sure it's right. So as you grow, you move into that next stage. The financial statement stage is pulling information back out of the software. So we're really getting that reports. Well, many times that's not where we start. We have to start with transactions and reconciliations. So as the company grows and they become bigger, more sophisticated, and certainly have more questions, we see this growth through these 4 stages, these 4 types of accounting as well. So you can not only use this as what you need in your organization, you can also use this as part of the stages of growth. And it helps you identify where am I at and what do I need to move to the next level. So these first 2 really are about input and making sure it's correct. And those last 2 are really about output and making sure that you can make good decisions. So it not only goes with what we do in accounting, but it also really lends to the growth and the maturation of the business. So what about you? Where are you at? I'm sure that you were able to identify with things that you're doing really well in your organization and maybe where you can see that next level of growth is available to you. That is just so much fun because it takes some of the mystery out of it. You don't have to feel like, well, I don't even know what they do or who to hire or I'll just get anybody. You can see that you may need somebody very strategic for your organization to go to the next level. So for our customers, our clients, we are usually in the reconciliation forward, and most of our clients are actually financial statements and projections. So if that's something that you would be interested in, please go over to our website and you can look at our virtual CFO services. We're happy to help. And if you have somebody that you would really like to train and have them have more knowledge and really get into the reconciliations and the financial statements, our all access course and all the training is a great place for you to be able to give all those resources. You can learn from us and certainly learn from my mistakes on things that you can make better in your organization. The processes are better. It's more streamlined. You can get financial results that are meaningful to you because you can follow the process of transactions, reconciliation, financial statement, and then projections. Thanks for spending time with me today. I am always thankful, and I hope to see you soon. Bye.